Good afternoon, everyone. This is Joe Gregory of Orbograph. Welcome to our webinar today called Healthcare Revenue Cycle Management. Our keynote speaker is Mark Brousseau, and we'll look forward to an energizing presentation by Mark. He is president of Brousseau and Associates and is a well-known industry speaker and consultant in the topic of healthcare payments. A little housekeeping here. If you do have any questions as the webinar is taking place, feel free to check on the Q&A box up above and send us a message, and we will do our best to answer those questions. If you have any technical issues, please feel free to hit that as well or respond to Nicole Mendez, that's NICOLE.MENDES at orbograph.com, and we'll be able to answer any questions that you have in that regard. So today's agenda is actually, and it sounds like I have one question coming in from the audience here. It says, no slides showing. Do we have any confirmation, Nicole, from the internal office that the receivers are seeing the new slides? Okay, that was just a minor glitch by someone. So it looks like that particular issue was isolated, and we have a response that says all's good. So, all right, so we're continue to roll here. So in terms of the agenda, what we're going to do is just a couple of real quick introductions and get a lay of the land from the attendees. Then Mark will take over, talk about HRCM. The landscape of the market, and what kind of opportunities this actually brings for financial institutions. Section 4 is a brief review of what the solutions in the industry can bring to solve problems that are out there, and how that can complement and address these issues that are out there. And then finally, a brief question and answer session. Okay, so to begin with, let's send out a polling question to everybody. The polling question is, how familiar are you with healthcare revenue cycle management? Okay, so to respond to this particular question, all you have to do is take your mouse and click on one of the colors. And if you're the bank expert, hit red. If you're familiar with it, hit blue. If you're somewhat familiar, hit yellow. If you know just a little bit about it, feel free to click on the green. And if you don't know anything really about healthcare revenue cycle management, but you're here just to learn, feel free to click on the purple button there. So we're getting a few final responses in from everyone. So we'll leave the polls open like that, and just give one more second here for everyone to respond. And now I'm going to close those polls, and I'm going to show you the results. So here's the mix of folks that are attending. You know, we've got a handful of folks who are familiar with this particular topic, a couple who aren't too familiar. So that gives us at least a good baseline in terms of who's in the audience today. So, you know, if you're familiar with Orbograph, maybe you've seen our press release recently with a recent acquisition. If you're not familiar with Orbograph, you may not know that we're a strong player in the financial industry as it relates to recognition technologies, and most of our expertise has been in the check processing side. And so what we've been able to do is essentially port some of our core technologies and make an important acquisition in the healthcare industry. And essentially what we've done is we've purchased a company that was out there, that was established in the marketplace, called Correct Claims Now, or CCN, as you may have heard it referred to. They've had some field-proven technology themselves along with us, and we've married those two to come up with a strong solution in the healthcare play. So our goal with this webinar and probably a series of webinars in 2012 will be to share with you industry data that we've gathered and try and provide value to your operation. If you're not an Orbograph user, at least provide you with some good information there. As a company, we've been around for 15 years. We have strong expertise in the recognition-centric type of solutions. We've got a nice, strong user base of 1,000-plus institutions. And we're owned by a larger company called Orbotech, who's about $530 million in revenues. So you might be wondering, why did Orbograph join forces with CCN? It was really because of the logic, the expertise that they provided and enabled us to move our solutions into the healthcare arena with a large-scale, secure presence. And you're going to hear a little bit later on from Brian Bruton, and he's going to address some of that with a couple of points. But for the time being, what we're going to do is we're going to focus on Mark Brousseau, keynote speaker from Brousseau and Associates. Mark.
Hey, thanks so much, Joe, and thank you, Brian, and thank you all for making time to join us this afternoon with the run-up to the holidays. I know time is scarce, but this is a pretty important topic. And, you know, marketing guys like me get a bad rap for using hyperbole, things like seismic shifts and paradigm shifts and game changers. But the fact of the matter is that when we talk about healthcare, this really is one of those times that you could use those phrases with a straight face and not let the business folks get a chuckle at your expense. I mean, we all know about the federal legislation that promises sweeping change, and while we don't know exactly how it will play out, we do know that many aspects of the legislation are going to radically change the way business is done in healthcare. And the thing is that the states actually have a head start on the feds. You've seen folks like Minnesota already implement laws that are driving the electronification of healthcare in a very big way. But at the same time that this is all going on, we've got providers facing huge requirements to invest in their facilities, their equipment, their IT systems, not only in order to meet regulations from the state and the federal government, but also to compete with one another. And the electronification of the industry is accelerating. A lot of the focus, I know, is on health records. And this is happening at a very fast clip. In fact, the industry is doing a very good job of electronifying its records. But the reason we're all here today is because you might be asking the question, what about healthcare administrative systems? Specifically, what about payments and remittances and claims? And the good news is those investments providers are making in records initiatives can actually be even more successful once we tie a money trail to them. And the annual savings in healthcare administration are staggering. We're talking about annual savings estimated at $35 billion. $35 billion. Think about that for a moment. We could eliminate 2.5 billion pieces of paper. I come from the payments background in general, and we've been pushing toward getting rid of those paper checks for years and years and years. And we look at these numbers and the cost savings attached with this, and you can see why we're all spending some time ahead of the holidays here. And the good news for all you bankers on the line is that you can play a very important role in this push toward administrative simplification. And we're going to spell that out at the end of today's presentation. First, a level set. Where do we stand in terms of the healthcare payments landscape? First of all, we all know that there's growth in patient payments. But today, most provider revenue is overwhelmingly tied to payers. Patient out-of-pocket payments are certainly growing. They're estimated to grow to $420 billion by 2017. That's introducing new challenges. That's requiring new systems. That's creating new points of pain for providers. But the thing is that whether it's a patient payment or it's one that's tied to a payer, most providers still don't know who to charge, how much to charge at the point of care. And it's not surprising that providers are writing off nearly 50% of patient receivables. 50% of the payments coming from patients. Physician bad debt overall is estimated at between $14 and $30 billion. That's 3 to 7% of net revenue, and this is not getting better. I was talking to somebody just this morning, and the bad debt is getting worse and not better. So improving receivables management is becoming crucial to provider profitability. When you look at everything coming down the pike, it's going to be key as those margins get squeezed and the resources get put upon that they figure out a way to fix these problems and to better manage the receivables. And this is no longer an automation topic. This is no longer something that's wearing just an office manager's hat is worrying about. The people at the highest level of provider organizations are focused on this. CFOs understand that this is something they need to get a handle on. And when you look at healthcare, it's in dire need of an overhaul. Many of you know me from my background with the Association for Work Process Improvement. We used to joke that the healthcare industry was the poster child for work process improvement. No other comparably sized U.S. industry segment has such weak administrative standards, lousy adoption of existing standards, and disjointed legacy operating platforms. If you look at how big healthcare is, and the fact that it's going to represent 20% of the U.S. GDP before this decade is over, we've got to do something about it. And meantime, there's no time to waste here. Providers, hospitals, insurers, all of them are facing pressure to get greater efficiency in their back office processes. They need these cost savings. Fifth Third Bank did a study last year, and they found that nearly a third of every dollar spent on healthcare in the United States is consumed by administrative expenses. Nearly a third. So you can do the math on this chart and see how much waste there is. And when you look for why this can possibly be, this chart does a pretty good job of illustrating that. Revenue cycle is really, really complex. And there's a lot of stakeholders involved in the revenue cycle, and this really drives the complexity. I'll give you an example. You might have heard of changes to 5010. This is a ANSI X12 standard for claims transactions. It's part of the change that's going on with ICD-10 adoption that involves the billing of the coding of medical procedures. Well, in the new 5010 rules, it basically says a rendering provider cannot have a PO box, must have a physical address. So this is trying to identify who a provider is. Well, the rules also state that you can pay the pay to field on a 5010 can have a PO box. So in other words, the remittance, the payment, can actually go to a PO box. Well, not surprisingly, providers are very confused. Many of them have interpreted the new 5010 rules to mean they can't use a PO box anymore. In other words, they can't use a lockbox. This is the kind of complexity that has really highlighted our industry for years, and we need to overcome. And there's lots of stakeholders, and that means there's lots and lots of confusion. There's over 750,000 physicians in the United States, 5,200 hospitals. This represents 3.8 million inpatient visits annually and 20 million outpatient visits annually. About per day. 1 out of every 11 U.S. citizens actually works in the healthcare industry. This is a lot of stakeholders. So when we talk about the changes that are going on in the industry, this is the number of folks that are being impacted by it. So electronifying medical records is getting a lot of the press in terms of the changes in the healthcare industry. But few applications in any industry can rival the inefficiencies of healthcare payments. Take a look at some of these stats. 15 cents of every dollar spent in healthcare goes just to claims processing, payment processing, billing revenue cycle management, and bad debt. That is $300 billion a year. 60 to 80%, depending on which analyst study you look at, of all payments in healthcare are still made by paper checks. Now, the good news is 40 to 60% of claims are submitted electronically, but physicians, hospitals, and labs are still spending more than $100 billion a year on just the submission of claims. And the big problem here when we talk about claims is that there's numerous medical billing systems that can't ingest the standard electronic 835 unless the file has been formatted to fit into the system. And anyone who spent time in the space knows that many payers have all sorts of nuances into exactly what they're putting on those remittances, which makes this a very big ordeal for the folks. So there's been lots of papers written and lots of webinars done about the problems associated with healthcare payments. But I think they can be summed up in 3 words: too much paper. And when we talk about EOBs, which are in all of your lockbox operations today, this is a big culprit. 50% of all EOB remittance advices, approximately 4 billion EOBs every year, are processed on paper. 33% of manual EOB processing and reconciliation results in $92 billion in write-offs annually. If you've got your calculators out, you're adding up all these numbers, you can see the staggering results here. 33% of the cost of patient inquiries, payer appeals, and secondary claims is the direct result of inefficiencies in retrieval processes. EOBs are a big problem. And you think, well, haven't we figured out a way to just standardize these? Look at this. Not picking on our friends from Cigna. We could do the same thing with many other large payers. But today, providers are receiving many different EOB formats from the same payer. These are just 4 EOBs from Cigna. If I had hunted, I probably could have found more. I've got slides that have Aetna and Athena on them as well. This is the challenge. Folks say we're going to have a template to grab this data. Well, good luck. There's no standardized way to get at these EOBs. And this creates a lot of pain for providers. Today, the average time for a provider to reconcile payments is about 3 weeks. Their escalating administrative costs are crippling them. The payments, the reconciliation, denial management, rebilling disputed claims. These are all issues that providers are dealing with today. And not to mention the financial losses because of write-offs. As I said, this problem is getting worse, not better, and will continue to do so as patient payments become a bigger portion of the pie. Providers typically don't have visibility into the true collected revenue of the organization. In fact, many providers tell me that it's so difficult to reconcile their remittances coming back from payers. Some of them never even do reconciliation. They assume they're getting paid. And today, as a result of the recession, as a result of tighter margins, providers are facing decreased cash flow at the very same time that they need more money for IT spending. This is when they've got new requirements around ICD-10, 5010, electronification of records, and their cash flow is going down. And they are, not surprisingly, seeing reduced productivity among their staff. Well, the good news, as you'd imagine, since we're here, is that electronic options exist. This is a chart that shows you the different EDI formats that are available for healthcare transactions. And electronification of healthcare payments and remittances certainly offers significant opportunities to eliminate paper-based processes. It replaces them with efficient, automated solutions. And this is the advancements in technology is making it possible to electronify all these different steps in the healthcare revenue cycle and gain cost savings at each step along the way, from enrollment to eligibility verification, all the way to adjudication. Things will get better as a result of administrative simplification. Administrative simplification is the name tagged to Section 1104 of H.R. 3590. This is the Healthcare Reform Act that we've read so much about in the newspaper. One of the primary goals of the healthcare reform rules is to lower these administrative costs by reducing inefficiencies around medical claim payment processes. This is going to have big-time implications for key industry stakeholders. you see here, reduce clerical burden, increase electronic transaction adoption, standardize once and for all the operating rules for eligibility, claim status, claim payment remittance, enrollment, and ensure compliancy of standards. For too long, we've had loose standards in this industry. The net result of all of these mandates is that it's going to compel stakeholders to examine their current business processes. We're going to take a hard look at all that complexity I illustrated a couple slides ago. And this is going to touch everything from data delivery to technology applications to financial systems to back office capabilities to payment processing. You name it. These rules, while they don't specifically address all those points, will touch on them and they'll compel the industry to take a hard look at them. The thing is that there's other factors that are going to impact the industry over the coming years. Now, you might have read just recently in the healthcare trade press about something called medical loss ratio mandates. This is basically going to require some new rules around payers and what they can put into their formulas for how they assign costs. As a result of healthcare reform, coverage expansion is going to start to roll out in 2013. This is going to put pressure on Medicare and Medicaid to offset some costs, and this is going to be something that providers are going to be paying very close attention to. There's affordable care organizations, ACOs. This is another requirement that's likely to create a trend toward managed care insurance plans over the next couple of years. This is a hot topic at TAWPY's HPAS conference last year. And with the increases in the adoption of consumer-directed healthcare plans and payers paying for coverage out of pocket as a result of things that have happened to them as a result of the recession, you're seeing a greater percentage of healthcare costs being carried by the patients, and you're seeing a lot more high-deductible plans out there. All of this is putting pressure on providers to acquire eligibility and deductible information. They've got to understand exactly what it is the patient's obligation is before they get too far down the road. For the first time, providers are actually asking patients how they plan to pay for their services before they provide the services. Think about this. The healthcare industry was the only industry in the country where you could walk in, have expensive services provided, and walk out never knowing exactly what you owed or having an expectation of when you'd have to pay for it. In many cases, the healthcare bill was always at the bottom of the pile of bills that Americans had to pay, and they never felt guilty about it. This is going to change. Now, payers are going to have a big load to bear in Section 1104. Really, the federal health reform puts the onus on them and not the providers to help push EFT and ERAs. And contrary to what you might think, many of the smaller payers in this country still aren't doing a lot around EFT and ERA. This is going to change all that. And one of the more complex and challenging requirements is going to be that unification of electronic payments and electronic remittances. The health reform rule says that we need to finally get those two married up, and that's going to help bring some fundamental change to the industry. There's a lot of money at stake here. There are approximately $161 billion in savings opportunities over just the next 10 years through the full adoption of integrated electronic payments and remittance advices. Below here, I've put a series of dates of when many of the operating rules are scheduled to go into effect. Now, the Council of Affordable Quality Healthcare, you might have heard of these guys, CAQH. This is a nonprofit organization, and Health and Human Services has tasked them with writing the operating rules for EFT and payment and remittance advices. CAQH is currently working to gain consensus on the stakeholders. You might have participated in some of the webinars they've done so that they can achieve adoption by January 1st of 2014. Now, as the specific rules associated with reform come out over the next couple of months and over the next couple of years, you guys are going to be, the providers are going to be faced with the challenge of making their necessary back office systems changes to meet these deadlines. Now, a cynic would say, how real are these deadlines? After all, if you might have noticed that the AMA recently was successful in its efforts to push off the deadline from 5010. And I would agree that there's the possibility that some of these deadlines could be pushed back, particularly depending on what happens in the next election cycle. But the thing that's important here is that directionally, this is telling the industry that electronification is coming. That's a good thing. So it gives providers something to work toward. Now, it's going to be interesting to see how some of the providers react. Certainly, larger hospitals are going to be in a much better position. They have more resources. They have more a better baseline from which to work. I'm particularly concerned about physician practices. Many of these guys are small businesses, and they don't have the resources, the understanding, the education on how to meet these deadlines. And many of these guys are going to be inclined to do nothing, to wait until the very last minute to be able to meet these deadlines. And that's going to be a challenge. Failure to address the system and technology needs that will be required to deal with these mandates could really result in costly penalties, but it's also going to deny them of the opportunity to get those cost savings they're going to need to meet some of the other mandates that are likely in the healthcare reform. So in other words, the expectations asked of them in terms of reform are going to go up, and that's when they're going to need those cost savings the most. So they've got to look at the big picture. It's not going to be easy to get towards simplification. And this is what many of the people who say the deadlines are not going to be made, this is what they point to. And let's focus on the provider obstacles for the purposes of this call. I mean, today, providers rely heavily on third parties for things such as patient collections, lockbox, financial record keeping, and clearinghouses. I think this is going to increase. They're going to look for more help from third parties to complement the resources they don't have in-house. Patients are confused. They're not sure when to pay. They're not sure what to pay. Providers are terrible at asking patients for money. And really, this is why we're in the situation we are, where patient payments are averaging 90 days. What other industry can you think of where getting paid in 90 days is a good thing? I have a neighbor who's a lawyer, and he says he always promptly pays his medical bills after the third invoice. This is exactly what happens across the industry. And bad debt involving patient payments is now pegged at $60 billion annually, and as I said, it's growing. The other problem is that payer paper checks and remittances are really expensive for providers to handle and process. They're pegged at about $10 per payment package to post and reconcile. That paper is expensive. And payer and patient payments are disjointed systems. They're going in two directions. In many cases, they're not unified systems. And as I said, providers right now are facing a perfect storm in terms of their systems issues. They have limited resources to begin with, and yet they're being asked to electronify their records, meet meaningful use requirements, and figure out a way to auto-post those 835s under electronification. I put ICD-10 here, and this is really a big issue for many providers. The ICD-10 is the change in billing codes. And there's a lot of confusion among providers, particularly the small ones, in terms of what this means. Do they have to train their staff? Will the software make the changes automatically? And the answer that many of the providers have come to is they're just going to keep doing what they're doing and see what happens. And what's going to happen is that they're not going to get paid correctly once the changes are made. Providers think health reform is going to drive electronic payments adoption. And that's right. Absolutely. 57% of providers, according to a study done by Taupey in 2010, said that they believe it's going to drive adoption. And so this is why it's so important that the industry overcome all those obstacles that I just laid out. And at this point, let's go ahead and do our first poll question.
Thank you, Mark. Mark, in the meantime, there was a question that was raised. Can you explain a little bit more about what an ERA is?
An ERA is an electronic remittance advice. It's basically an electronic version of an EOB. An EOB, as you know, is an explanation of benefits. It is not a bill. It is a remittance advice. And so an ERA is an electronic version of an paper EOB, which all you bankers are seeing show up in your lockbox operations, no doubt, today. There's some standards around ERA, and while those standards spell out some of the detail that should be on an ERA, different payers have different interpretations of ERAs, and that's what's really created the challenge in terms of adoption of ERAs. So in order to be able to ingest that file from a payer automatically into their patient accounting system, PMS, patient management system, they'd have to make changes to understand what data they need to get off of the ERA. So many of the providers and payers find themselves at loggerheads. Who is it that's going to fund that change? Who's going to make that change to the system? When you have a situation, Joe, where providers are doing business with one payer in particular on a regular basis, I'm here in Pennsylvania, maybe my local physician does a lot of business with our local Blue Cross Blue Shield organization, it behooves them to spend the money to be able to ingest the electronic remittance advice from the Blue Cross Blue Shield organization automatically. Well, if somebody shows up from out of town and it's a remittance advice from, say, a Blue Cross Blue Shield in North Carolina, maybe, they might not be as incentivized to be able to ingest that automatically. What they'll do is they'll go ahead and print out the electronic remittance advice and key the information as they would if it showed up by paper. And so we're going to show some statistics later about the adoption of ERAs, but it's important that the industry does two things. Not only grow the adoption of organizations that receive ERAs, but that grow the number of providers that can actually ingest them and automatically post them automatically to their accounting system. This, by the way, isn't unlike what the lockbox operations are doing today when they're providing a file feed to their corporate customers, which they're using to be able to automatically upload.
Wow, there's a lot to it, that's for sure. So that brings us into the polling question, and we've got most of the responses tabulated here. Any final responses on how large do you think the impact of the federal health reform will be on increasing EFTs and ERAs? So any final comments here that we have, and I'll get ready to close the polls right now and then publish them. So we can see here that the majority of the folks online believe there will be a significant impact with 21% of the responses being marginal.
The good news is everybody recognizes there's going to be an impact here. That's the good news. And I do agree that it'll be significant, and I think that that's a good thing for the industry. And when we look at stats like this is from our friends at the Medical Group Management Association. These guys are really serving the physician practices. And they did a study with Visa last year to find out exactly what's going on with patient payments to medical groups. And here's what they found. They found that the average amount due per office visit is $109. That's not a bad average amount. The percent of revenue due to high deductible health plans, look at this, is 15% now. And I bet you when they go back and do the study again, it's going to be higher. But here's where things go off the rails. The number of billing statements sent to an account before an outstanding balance is paid in full, 3.3. Hey, look at that. My neighbor was probably part of this study. So 3.3 billing statements before somebody's going to pay that $109 bill. Percent of total accounts receivables from patients written off as bad debt expense during the past fiscal year, 11%. And remember, patient payments are only going up, so this is a real pressure point for providers. And percent of total patient bad debt turned over to collections recovered is only 15%. So truly, when we're talking about write-offs, we're talking about write-offs here. So what role is patient payments having? Over 23% of patient services revenue is paid by patients. Doesn't seem like a lot, but that's a lot higher than it was in the recent past. And collections from high deductible health plans represents 15% of patient service revenues. So the percentage of patient payments continues to grow, but still represents a small percentage of provider revenues, but a really high percentage of their pain point, as you saw in that past slide. So how is it that practices accept payments? I think this is a really interesting slide. Not surprisingly, they accept payment. Almost all of them accept payments in person, by mail, or by phone. But look at this. Only a quarter of practices actually accept payments by internet web portal. So this presumably would be some sort of a credit card or ACH transaction. Really missing the boat here. While virtually all of them can do it via these other three, only a quarter can do it by web portal, and those would probably be their cheapest transactions. And we talk about patients' payments, we're probably talking about patients' payments by check. So when we asked folks how patient payments are made at the time of service, that's in the upper left-hand corner, about a third of transactions are made by check. 41% are made by payment card. That's really good. The folks like Visa have made tremendous inroads, particularly at the point of service. But things get a little more cumbersome afterwards. So when you ask how patients pay an outstanding balance by mail, 3/4 of folks are doing it by check. And 44% are paying by check when it's an outstanding balance in person. So it's interesting that what happens is at the time of service, you have the best shot of getting electronic transaction from a patient. After that, you're probably looking at an inefficient and costly paper check. So when we look at all of this, what role do banks play here? What's the opportunity for banks? Well, today, healthcare accounts for about 5.5% of large corporate cash management revenue. I know some of you on the phone are thinking that's too high, that's too low based on your bank, but this is overall. And healthcare leads all industries in contribution to revenue growth and cash management. So this is why you're all on the phone and you have senior managers telling you, figure out a way that we can play in this revenue cycle management space. And healthcare providers use a broad range of cash management products from you. And they're heavy users of lockbox and remote deposit capture, although not as heavy as you think. In just a moment, I'm going to show you why. And healthcare financing is increasing as a specialty area for many banks. This makes perfect sense. If you're going to increase your play in the revenue cycle of banks, you're going to use that visibility to your advantage to make more informed financing decisions. And banks have an opportunity to help drive both ERA as well as EFT adoption. So today, more banks are offering EOB processing services. That's obvious. Where we are in that continuum varies widely depending on who you are. There's, been banks processing EOBs manually for as long as I've been in this industry, keying the data, maybe just bundling up the EOB and sending it back to the provider. Now we have some banks who are doing the auto lifting, basically some data capture, and that's it. But there's more that can be done here, as we're going to explain in just a moment. And banks and third-party processors get it. Many of them are expanding their healthcare offerings to include electronic remittances as well as electronic funds transfer. And this is a natural extension of what you're doing in the lockbox. And over time, I'm pretty well convinced that you're going to see more reimbursement methodologies evolve that are going to offer some new funds management capabilities, things like funds distribution, cash management for outcomes-based contracts, reconciliation tools. Banks can offer all of this to providers. You're good at things like reconciliation. You're good at things like fraud mitigation. These are things that providers need help on, and they're going to look to you for help with. And I believe they're going to look to banks to help with reconciling payments. They're going to look for third parties. The key for you is going to be understanding your responsibilities and keeping tabs on what the payers are doing and the clearinghouses are doing. Banks face an interesting future in this space in that you see other entities, whether it's Emdion, whether it's Optum Health, who are finding ways to disintermediate or partner with banks to basically take away some of that service revenue. So in the case of some of these organizations, they actually have a banking entity where they can do the clearing and settlement. In other cases, they're positioning themselves as an operations extension for you, where they're saying, we'll process the healthcare payments, and that might be okay to do a revenue share with you, but if you're competing against a bank who has that kind of operation, that's going to become a threat to you. So it's imperative that you keep tabs on what it is some of these other entities are doing in this space. Because the fact is, you do have a lot of revenue tied up in healthcare payments already in your lockbox, regardless of what you're doing with ERAs and EFTs. 34% of providers say they currently use a lockbox to receive patient payments. This number is going to rise. This was from a study Toppy did in 2010. That brings us to our next poll question. We wanted to know, how has your volume of healthcare-related lockbox transactions changed in the past 12 months? Joe?
Thank you, Mark. And here's your opportunity to respond to this particular question. How has it changed over the last 12? The red is significantly higher. The blue is slightly higher. The yellow implies unchanged. Green is slightly lower. Purple is significantly lower. And the orange is basically if you don't have a lockbox set up for your bank. So we'll wait for a couple of final moments here. And some very interesting stats as you've been able to explore there, Mark. We'll close the polls now and show everyone what the results are. So we're essentially slightly higher to unchanged, I think, is the strongest responses there from the attendees.
Yeah, and this is really interesting. So we see here that that 38% of the respondents have said that their healthcare-related lockbox transactions are slightly higher. I think for those folks, there's a real opportunity. So you've already got some penetration into the market. Here's where you're looking and saying, now how can we grow this? This is some of our most lucrative transactions. How can we extend this, boost the volume, not only in terms of the number of transactions, but in the average transaction amount that we're getting from these folks? And that's why you're here today, because offering services like ERA and EFT will help you capture some more transactions than you currently are in your lockbox operation. And here's another way that you can do it. Look at these numbers. Toppy asked providers whether they use RDC at the point of service. Only 22% of the providers who responded said they were currently using RDC. This is a real bone of contention for me. And in many of the healthcare conferences I go to, I hear providers lamenting the volume of checks they still have to handle in their offices, and yet invariably I've found very few are using RDC. What are they telling me? They're saying that it's too expensive a service, that my bank doesn't understand my business. And I think those two actually go hand in hand. Because I think what's happened in many cases is banks are offering the providers a check-centric transaction tool, whereas they need to understand that the point of paying is around that remittance as well. Not only getting the check deposited, but also understanding that we need to do something about the reconciliation on the back end. And I think you're going to see a real push among some banks, and this is already starting, to offer a healthcare-specific RDC solution that really addresses those needs and ties in some of the reconciliation tools that the providers have been saying they need. So where are we with ERA adoption? Someone asked before about ERAs. Today, many providers have the ability to receive ERAs. 77% of providers can currently receive an ERA from a commercial insurer. 79% can receive an ERA from a government insurer. Only 10% of providers say they can't do either. This is a misleading statistic. It's important we show it to you, but it's also important we give you the asterisk here. And that is, as I started to explain before, while providers can receive the electronic remittance advices from insurers, there's not a guarantee that they're auto-posting it. In fact, the smaller the provider, the better the odds that they're printing out that ERA and they're keying it. Or the ERA doesn't have the information they need to do reconciliation, and they still have to print it out to do some kind of investigation. So then we look at automated posting adoption. Do you use automated posting technology? Well, 2/3 of providers say they do use automated posting technology, but again, this doesn't mean they use it for all ERAs. It just means they have the ability to do it for some of the ERAs. Now, here's the important slide. How are providers receiving ERAs? More than a quarter of providers say they currently receive ERAs through a bank solution. This trails only behind EDI network and health plan portals, which is what you'd expect, right? Health plan portals make perfect sense. So banks are already playing a big role in ERA adoption, but a plurality of providers say that, you know what, there's a bullet missing on this one. Technologies providers are considering for receiving ERAs. What the bottom bullet should be is that banks are the #1 place that providers are going to look to help them receive ERAs in the future. It looks like we lost a couple of bullets and things strayed. So this is something important. Today, you're already having some sort of penetration into your healthcare customers in terms of lockbox. You might be offering RDC, but there's a role for you to play in terms of ERAs, and providers are already thinking that this is something they want to get from you. This is the perfect, I'm not the sales guy on the call, but this is the perfect candidate for sales. There's somebody who knows they have a problem, and they think you have the solution. What an ideal situation. So what are the conclusions? First, healthcare revenue cycle management remains inefficient. We will all agree on that. And the ERA EFT landscape is rapidly evolving. Seismic shift is appropriate here. And healthcare reform will drive EFT and ERA adoption. For the 76% of you who think it's going to be significant, you're absolutely right. Providers want solutions for straight-through processing. Just like any other corporate customer has pains in their AR department and want to get rid of that, providers are in the same situation. And just as corporate customers have come to your lockbox and treasury folks for solutions to auto-posting for years, you should expect providers want the same things. They want automated claim submission workflows. They want collaboration tools to improve exceptions and reconciliation. And there are multiple solution approaches and delivery models out there. One thing that's going to be important for healthcare banks to keep in mind is that this is no longer an on-premise answer all the time. There are cloud-based solutions available today that speed deployment and help drive some of the total cost of ownership, the payback that you get on these solutions. And there's lots of technologies in the market that are proven and have a certifiable ROI attached to them. And healthcare finance managers, aka CFOs, are recognizing the impact automation has on working capital management. This is no longer a tough sell to CFOs. They get it, and they're under pressure to get it fixed. So this is a great time for you to have that conversation with them. And standards should involve for matching claims and payments. A lot of the challenges we've had in reconciling the paper and electronic claims and payments should be taken care of with some of the efforts of CAQH and some of the others as part of health reform. And you have an opportunity to assist with both healthcare payments and remittances. And I think the corollary of this last bullet is that the third-party processors have that opportunity as well. So if you don't step into the fray, and if you don't offer the solutions that help the providers here, I'm fearful that somebody else will, and you'll run the risk of being disintermediated and putting all that lockbox revenue that you currently have attached to healthcare clients at jeopardy. And with that, I'll turn it over to Brian Bruton.
All right. So we've got, so in the fact that we support all of the comments that Mark just went through, we've developed a suite of services to support our customers' needs and their customers' requirements as well. We believe that these services are important to banks wanting to protect their treasury services to their healthcare clients. So, you know, as you look at clients, they're looking for new ways to serve posting requirements, reconciliation requirements. They're going to be looking for someone who can offer that. To that end, I'm going to spend about 5 minutes here giving a summary of our suite of services. But what I'm going to go over here is it's essentially a product or a solution to assist with the automation of both posting and reconciling payments for your customers, your lockbox customers. So we offer the ability to take those paper EOBs that Mark talked about and convert those into electronic payment files. We support, obviously, the standards of 835, but we can also support customized outputs. Not all PMS systems, not all providers have the ability to take a native standard 835. They have older systems, they haven't upgraded, they haven't budgeted for the ability to take that 835, so they have some older methods, more traditional legacy methods for importing data, so we can support those non-standard customized type of formats. At that point, we essentially have a postable file that's balanced, but the thing that we're missing oftentimes, not all the time, is the ability to deliver a reconciled remittance file for that posting purposes. So if there's an 837 available, which is the claim data that was presented for payment, we can fill in missing information and actually deliver a file to that provider that allows them not only to post that into their PMS or their hospital patient management system, but link that back to the actual claim or encounter, if you will, and the service line. So if you build something for $100 and you only receive $80 for that payment, how do you make sure you post that back to the John Smith service line that it's for? So that's what I'm talking about here, making sure that not only that remittance advice that came in on the EOB is electronically available, but to supplement that with the claim data you sent out so that you have essentially an EOR, an explanation review, or a fully populated remittance file. Now, if you think about it, those paper EOBs are generated from the same platform as an electronic 835 EDI format. So if there's data missing in the paper EOB, it just stands to reason that there are times when that data is also missing from the 835. If they can't put it on paper, they can't put it into an EDI file. So we offer the same service with the EDI files. We can take the 835, match it back to an 837, and offer that same postable file that will auto-reconcile back into that PMS system or patient accounting system. Our services, our platform are both HIPAA and HITECH compliant. We offer various different search tools where we take those 837, 835s, we parse them into our platform and deliver the ability to search. So whether you're searching for a patient name, a dollar amount, a CPT code, your customer has the ability to immediately find what they're looking for. One of the most helpful parts of it is they can actually search by denial codes, remark codes. They can look at various different exceptions, contractual underpayments, things of that nature, and get down to the information they're looking for very quickly, rather than looking through a mass amount of data manually. They can go and say, well, just show me everywhere where I was underpaid, show me everywhere where I have a zero payment or a denial code. You can also categorize by denial code, so that if it's a medical issue like a coding issue, whether or not a CPT code was used properly or a diagnostic code was used properly, that's more of a medical type decision to make. If you've got issues along the lines of adjudication, be it a member ID, a group ID, the relationship to the insured, things of that nature, those are handled by a different group of people. So it's very easy to categorize the various different types of exceptions, so you can give it to the most efficient channel to get that particular service line or that claim corrected. We also offer business analytics, which I'll show you a little example of here in just a second. That allows more of a gross look at the performance of payment. You can take a look at by payer or by group of payers, how much have we billed, how much have we collected, how much is outstanding. If your provider customer has the ability to deliver 277, which Mark mentioned, is a payer acknowledgement. Once you submit an 837 claim, you can get an acknowledgement back from the payer that says, hey, we've got this. That allows us to track day sales outstanding in real time, not has the claim been submitted to the insurance company or not. Once it's submitted, we can actually track how long it's taken to get paid without that carry float inside the hospital or inside the practice. It's a completely hosted service. It's not software you have to buy, install, figure out how to run yourself. It's a thin client interface to the web with, FTP submission of paper EOBs from the lockbox site, as well as FTP transmission of those 837s and 835s I was talking about, either from the bank or from your client directly. The next thing I want to show is kind of a look and feel slide. We offer a private labeled look, so you don't want your client necessarily to see Orbograph all over the place. You want them to see a brand that they're familiar with. So we certainly offer the ability to give the look and feel of the bank's website, if you will. We have several different fields here selected. One thing that's interesting that we do offer is the ability to pick the fields you want to show. In a professional claim, you've got about 34 different fields that you can search by. In an institutional claim or a hospital claim, you've got north of 70 different fields you could show. Obviously, showing 35 or certainly 70 fields on one screen is not terribly useful, nor are all the fields something that every user is going to be interested in. So we actually give the ability for that individual user to pick the fields that are most relevant to them and display those. Any of those fields can be searched, greater than, less than, range, all the normal type search parameters that you're familiar with. And then we give detail by service line across the board. Those are also linked to the source data, that 837, that 835, the paper EOB. They can go back and find that original document that generated this data set. We as Mark was talking about, a lot of these PMS systems, the provider might be able to accept an 835, but they might not be able to automatically post it for whatever reason. What we do is we give the ability, a Blue Cross and Aetna, Cigna, the EOBs all look different. Therefore, you got to search around and find what you're looking for to post. So we offer the ability to give a normalized single format for all different payers. So we'll ingest all of the different payer information, convert it into a data set, and then give your customers the ability to render a single format for all of those payers. So your Blue Cross, your Cigna, your Aetna, all have the same look and feel. They get comfortable with looking in the same location for all of that posting information they're looking for to get that payment posted and reconciled. And finally, I've got a little slide here that shows a profit analysis for a hospital. There's a number of ways to slice and dice this. This is an analytic tool. You want to see performance by doctor, by department in a hospital. You want to see performance by payer, by year, by quarter over quarter. Maybe your customer has a contract with a large payer coming up, and they want to go look at the performance over the last year before they negotiate a new agreement for the upcoming year or two. They can go back and look and see what they're getting paid for one payer versus another payer. Look at the quantity of those services rendered. If you're a surgeon, you might offer more appendectomies than you offer gallbladder surgeries. So you can use that type of gross information to negotiate and better manage your cash flow and your receivables. But anyway, that's just a real quick look at what we're offering. If you want to see some more information, clearly our website has a more in-depth iteration of what we're offering at this point. Joe?
Excellent. Thank you very much, Brian. And we do have one final polling question here, now that everyone is reclassified as an RCM expert, of course. And the question is, what answer best describes your bank's healthcare revenue cycle management plan in 2012? Okay, so as you're looking for the marketplace in your geography, is this one of your top priorities? If so, click on the red. If it's more important than 2011, and it's improving or increasing in importance, hit the blue, please. The yellow would actually be less important. Green means you're still in your early phases. You're interested in it, but you're starting to develop your plan. Purple, of course, implies that you're going to react to what your competitors do, which can be a very viable type of approach at times. And last but not least, is your bank not interested at all in the solution? So I think we have a closing of the polls, and I will display the results here. Mark, anything here that surprises you?
Well, I see 3/4 of the respondents to the survey say it's either more important than 2011 or among their bank's top priorities, and I think that's absolutely in line with what's happening in the market. Financial institutions are keenly focused on healthcare revenue cycle management and the role they can play. And I think if you're not paying attention, if you're not developing a plan for long-term strategic growth in this space, you're going to be left behind. You need to have those plans done sooner rather than later, and I think you're in the right place.
Would you say this is pretty consistent with industry-type responses, though? I mean, we have a pretty concentrated group here of folks who had expressed interest in the webinar. But how do you think this compares to maybe the interest overall? You think it's pretty close?
Yeah, I think this is in line. I don't run into many banks that don't say that healthcare revenue cycle management is more important than it was the previous year. In fact, what I'm struck by is how many regional or mid-tier banks, and now even community banks, are trying to find ways to offer these services to their healthcare customers. So just as you're seeing smaller banks now offering more sophisticated lockbox and treasury services, that's obviously as a result of the advancing technology, I think you're also seeing them realize that there's an opportunity for them to offer something new to the healthcare clients who are already doing business with the bank. And keep in mind that in many cases, the president of a regional or community bank is probably sitting on the board of the nearby hospital or hospital network. So these folks have a great in to offer these folks a service. So I think if you're a larger bank, you should be paying very close attention to what even some of your smaller competitors are doing. While they might not have this sophisticated an offering as you, they are going to be just as inclined to seizing the opportunity.
Yep, great points, great points. Now, we're going to enter into the final section of the webcast. Just take a moment or two to ask a few questions. We do have a couple that came in, and then if you, the remaining attendees, if you have any questions, you know where to reach us up in the Q&A section on your screen. The first question that came in was, what's the #1 mistake banks make when rolling out the HRCM platform?
I think it's underestimating the level of knowledge they need to have about the providers they're serving. So don't send a generalist treasury sales officer into a provider account without them having some background in healthcare revenue cycle management. And as you can tell from this deck, there's lots of acronyms, lots of numbers in terms of the different EDI standard sets, and that can be very overwhelming. And providers are very skeptical of sales folks who don't have a good handle on this. So you'll see many banks who will hire former healthcare SMEs to be part of their sales team or be a sales support person to help sell these services. So I think that's important. The second thing is don't underestimate the onboarding process. So you really need to ask lots of questions up front of the provider and what it is their requirements are, what their documents are, and actually lay your eyes on them, or else you're going to find some very unpleasant surprises during the onboarding process that's going to slow it down, and it's going to slow down your path to revenue.
And those are things that us operations people know to ask, but yeah, Treasury Management may be a little bit less concerned on that. A good piggyback question that came on this is, with that being said, let's say that the financial institution goes out and starts marketing these types of solutions. What's their model? Like, how do they drive fee revenue from expanding their lockbox products?
Well, there's really a lot of different opportunities to commoditize this, or to monetize, or rather, commoditize would be an unfortunate situation, but to monetize these services. So as Brian ticked off so well in his slide, there's a lot of different steps to the revenue cycle that providers are going to be interested in. Every one of those have an opportunity for monetization along with them. So this isn't just a transaction processing model now. Now there's an opportunity to be able to help with things like reconciliation and delivery of ERAs and help with denials management. So the models vary in terms of what the fee structures are, but the fact is that this isn't just a straightforward transaction processing model anymore.
Okay. Question for you, Brian, is some of the screens that you had showed before. Are those application capabilities, do you think, complementary to the Treasury Services offerings of cash management online services that they have today, or is there actually some replacement mechanism typically considered with that?
Well, I kind of guess that depends on the bank and what they're currently offering, but they're intended to be complementary. From a Treasury standpoint, you talk about, other than just giving the client something to kind of keep them as a client, how can the Treasury Department or the general corporate area at a bank benefit from this? When we talked about being able to look at 837s, day sales outstanding, how long it takes to get paid, things like that, you can actually use that data at a bank to determine, lines of credit. What interest should we charge? What amount should we loan on the outstanding balance of receivables? Maybe you want to loan a higher amount for a Medicare than you would for a Cigna receivable or something like that. But you can data mine all of that data through that analytic tool that I showed. But anything we talked about there is clearly available as private label as an add-on or a complementary service. If the bank has some healthcare offerings already, it might be duplicative. But if you're not offering much in the way of healthcare, more than likely it's not duplicative.
Gotcha. Okay. Good deal, and I'm sure they could export that data into their own data warehouse if they wanted to as well. So
sure, and we offer single sign-on capabilities so we can merge and integrate, and then we also offer the ability to export data in standard formats as well as custom, so they can import that to whatever they'd like.
Yep. And one final question, Mark. I think this is probably back at you. Can you elaborate on a healthcare-specific RDC solution? Are there any capabilities which are unique to the provider, which maybe you wouldn't normally do to a retail store or something?
That sounds like a great topic for another webinar, but in short order, I would look to capture documents as well. I would say documents, of course, a check is a document, but I would look to capture full-page documents as well as checks and be able to either manually or, and we're in the perfect environment to say this, automatically capture the data on those supplemental documents to be able to understand exactly what is the payment is for. But that's the crux of it without getting into too much detail here.
As well as things like correspondence.
Absolutely. Yeah. I think without filibustering, I think that that's the way RDC needs to go. I think you're going to see an evolution in 2012 of this idea of the remote lockbox or the virtual lockbox, if you will, where remote deposit capture evolves into an extension of the services that you'd expect in a back office lockbox. In healthcare, property management, some of those types of application, because of the data-heavy nature of the business, are ideal for it. So I think when you're planning out your solutions, and this is the advice here, I would think in terms of finding ways to develop a platform that can serve the providers wherever the payment might come. So that's the way I would look in terms of a healthcare-specific RDC solution.
Excellent. Well, with that, let's bring our webinar to a close. Mark, Brian, thank you so much for presenting. We will be forwarding you a copy, all the attendees a copy of the webinar presentation by Tuesday of next week. And look for additional Orbograph webinars coming up in 2012. Thanks, everyone, for joining. Have a great day.